Hello guys, I read the article by Jonathan Cable. Inflation climbing. Tunisia annual inflation rate has hit a series of record hikes this year, touching 8.2% in June. The government has raised petrol price 3 times this year. It now costs 100 dinars to fill a typical four-door salon compared to 93 dinars. At the start of the year, in May, farmers in several areas protested at the high cost of animal feed, and the government said it would raise the price of some food, including milk, eggs, and poultry. Tunisia is particularly vulnerable to grain supply disruption caused by the Ukraine war, importing 60% of its soft wheat and 66% of this barley from Russia and Ukraine. The World Bank says. In June, the World Bank approved a $130 million loan for wheat and barley imports. Hardship is on the rise. In an interview with a local newspaper in May, the Social Affairs Minister said the number of families in need had grown from 3,100 in 2010, the year the pro-democracy uprising began. To more than 916, close to 6 million Tunisians, or half the population, are under the poverty line. He added unemployment is high, hitting 18.4% in 2021. The World Bank says it is particularly high among young women and in the west of the country, London, Tokyo, New York. The global economy looked interestingly likely to be heading into a serious slowdown just as the highest inflation in a generation prompts central bank to aggressively reserve the ultra loose monetary policy adopted during the pandemic to support growth, data showed on Friday. Business activity in the United States, the world's largest economy, contracted for the first time in nearly 2 years this month. Activity in the Eurozone retreated for the first time in over a year, and growth in Britain was at a 17-month low, forecasting managers surveys said on Friday. In another ominous sig for the global economy, Japan's government is expected to sharply cut its forecast for domestic growth. Meanwhile, China's strict COVID-19 lockdowns and Russia's invasion of Ukraine have further damaged global supply chain that had not yet recovered from the pandemic. S&P Global on Friday said in preliminary or flash U.S. Composite PMI output index had tumbled for more than expected to 47.5 this month, from a final reading of 52.3 in June. That was the fourth straight monthly drop that was driven by weakness in the service sector, which contracted enough to offset moderate growth in manufacturing. Thank you. That's all from me. Don't forget to like, share, and subscribe this video. Thank you.